Stop overpaying on your home loan. We understand that managing your finances can be overwhelming, especially as interest rates continue to rise. With access to 70 plus lenders, our team of specialised brokers will find the best rates for your specific needs. Count on us to secure a lower rate swiftly, giving you the confidence you deserve. Book an appointment with one of our experts today to protect your financial well-being and secure your future. Call us now at 02 8866 2444 or visit our website at finny.com.au.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello, everyone, and welcome back to another episode of the Smart Property Investment Show. My name is Kyle Robbins. I'm your host, and I'm joined today by Simon Kuestenmacher from the Demographics Group down in Melbourne. How are you going, Simon?
I'm very good, thank you.
Yeah, it's a bit chilly. We were just discussing the weather here in Sydney and Melbourne, so it doesn't feel like spring, but it definitely is. Today's topic of conversation, or predominant topic of conversation, will be the skills shortage and its real estate repercussions. I must admit, Simon, I'm a bit of a novice when it comes to the skills shortage. I'm not too familiar with it. Can you enlighten myself and the listeners on, I guess, what it is?
Well, the skills shortage is a simple way of saying there aren't enough workers around for all the jobs that the economy has on offer. And this is partially reflected in a very, very low unemployment rate. We now sit just over 3.5% of population unemployed. And usually economists think about 4.5% as full employment. So if we are below that, we say there is a bit of a skills shortage, and anyone running a business in the last couple of years would have found it very hard to hire staff. It takes longer to find the staff that they need, and many businesses say that they just can't find the right staff. And so that is then holding back their economic opportunities.
And what's the trend line been for unemployment, I guess, in the last couple of months? I think, obviously there's been a lot of economic headwinds. Has it sort of tracked upwards, or is it remaining a bit stubborn?
So unemployment was for a long time pretty stable at around 3.5%. It ticked up slightly to 3.7%. And that had to do with the tightening of the RBA, of the Reserve Bank of Australia. And if they hike up interest rates, it means that it becomes a bit harder to run a business. Then some businesses stop hiring, some businesses need to close. And that is all within the intention of the RBA, who wants to slow down the economy so that they get the inflation rate under control. That's the main goal of the RBA, is to make sure that we don't have inflation running amok. And so whenever they feel, we have too high of an inflation, they hike up the rate. And the goal is to increase unemployment and to stop us from spending. But this is already when we talk about demographics, and the idea of stopping Australians to spend and increasing unemployment is very difficult at the moment, because you fight a demographic uphill battle, meaning demographically speaking, we want to be in a phase of record high consumption. That simply has to do with the biggest cohort of the Australian population, the millennials, now moving into the highest spending phase of the life cycle. That means millennials, people born in the 80s and 90s, they're now reaching their 40s. They're now reaching the family formation stage. And right around 43 is the highest spending phase of the life cycle. You have super high incomes because you had a couple of promotions at work throughout your career, but you have 1.7 hungry kids at home that eat a lot of wheat bix. They need school uniforms, cricket bats. The costs don't stop. Plus you have a big fat mortgage. At 43, every dollar that you earn goes straight out the door back into the economy. It's annoying for all 43-year-olds, but it tends to be positive for for many players in the economy, because there's so much consumption. That tends to be nice. At the moment, this is not what the RBA wants. And so they want to stop people from spending. They can't stop millennials from spending, so to speak, simply because the stage of the life cycle necessitates it. You have a big fat mortgage, you have kids, costs will come your way. So you can only stop spending so much. And traditionally speaking, we would have expected that the cohort of retiring baby boomers is now helping to curb spending, simply because retirees are meant to be poor and meant to be not spending so much. It's a bit different with the baby boomer cohort. They are absolutely asset rich. They benefited from high interest rates. They must also own 60% of all the cash savings in this country. That means you add up the interest rates, you give those people more money to spend, and they figure, hey, why not? I just felt cheated out of 2 good years of my retirement because of the pandemic. Money is coming my way. I might even not be completely retired. I might have only partially retired. I might still be connected to the world of work with a day or two that I work here and there. So I have money coming in left, right, and center. I'm already drawing down my pension. Those folks won't stop spending. So in order to make sure that we stop spending, in order to make sure that we raise unemployment a bit, the RBA needs to hike interest rates, needs to keep them at the moment relatively stable to create economic pain. And that's fine. So they will, with this measure, they will get inflation under control. It's all but certain. The problem is that the economic pain is very, very unevenly distributed. The economic pain will almost exclusively hit low-income earners and young people. That's it. So there is certain kindling for social unrest. We're not talking guillotines in the street or anything. We're talking about a lack of social cohesion. We're talking about social dissatisfaction. We're talking about a further increased votes for third parties in the coming elections, so and so forth. That's what's bubbling away under the surface of society. And that's a long-winded way of answering your question. The interest rate rises, they did lead to a slight uptick in the unemployment rate. And we must not mistake that for a lack of the skills shortage. It is still harder than ever before to find staff. And of course, the lack of staff, that is reflected in the property sector as well. Because, we have a housing shortage, housing affordability crisis, and we now bit by bit realize that we want to build our way out of this. So we figured supply is the name of the game. All the public policies are now geared finally towards increasing housing supply. That's all fun and games, but you can write all the policies in place if there aren't enough bricklayers, concreters, electricians around to build all of our houses. Guess what's going to happen? Not much, huh? And so we then need to import them from overseas. And that then again lowers the unemployment rate and so forth. And we go on and on and on. So this whole interest rate discussion, this whole inflation battle discussion, that'll be with us for the foreseeable future.
How long do you foresee it being a discussion and being a problem, this skill shortage, unemployment, housing crisis stuff? Is it a good couple of years before it sort of comes to a conclusion, or?
Yeah, so the skills shortage per se, that will last for the next decade. Even under high migration scenario, it will last simply because we have on the older end of the age spectrum, we have the big baby boomer cohort retiring. They leave the world of work. At the young end of the age spectrum, you only have a small generation entering the world of work. So you have big generation out, small generation in. That's an imbalance. As if this imbalance wasn't severe enough, we have the millennial generation, people now reaching their late 30s, the top end of the millennials, they're making babies. That means they leave the world of work temporarily as they go onto parental leave. So they also, for the next 10 years, will, at least for a short while, be missing from the workforce. So the skills shortage isn't going to get much better. And that has severe implications for every single industry in this country, because workers must come from somewhere. And, if you can't create enough workers, if you can't import enough workers, maybe we need to find smart ways to minimize the need for labor. You could do this through automation, AI, algorithms, software. These are the buzzwords that we throw around. And they could, of course, very much diminish the need for labor. And that's much needed. And it's probably also generally helpful for the whole population. So if we're automating jobs these days, that is not going to hurt workers, because those workers can easily find a new job in this, stressed workforce environment. But any job that can be done by a robot should be done by a robot. So if you think about, we just finished the grand final last weekend, and that grand final in 2 or 3 years, do you think humans would check your tickets at the entry gate? Probably not. That can be done just as well with a machine. At halftime, will the beer at the MCG be poured by a human? Probably not. It will be poured by a machine. Machines can do this job just as well. And so we're then talking about these machines. They free up a bit of man hours that can be spent on other tasks. So when we talk about, for example, healthcare, The healthcare industry and the aged care industry will need heaps more workers. And those workers, so sometimes we talk about automation in aged care. We're then not talking about robots that go from aged care home to flip over old people. That's not what we're talking about. But we're talking about all other sectors of the workforce freeing up man hours that can then ultimately be transferred to other sectors of the economy. And that shift will continue for the next decade.
Awesome. We'll unpack more of this after this break.
Are you stressed out not knowing where to find distressed, off-market, high cash flow properties in high-growth areas? What about the best strategy to build a wealth-generating portfolio? Look no further. Dragan Domovsky of Buyers Agency Australia can help. With over 20 years of experience as a property investor, Dragan is a qualified property investment advisor and expert buyer's agent, so he knows how to find the best deals and negotiate for his clients. Right now, he's offering a free 45-minute strategy session to get you started, normally worth $500. Text the code BAA along with your name and email address to 0405 105074. That's 0405 105074. And take advantage of this offer. Take control of your financial future today.
Welcome back to the Smart Property Investment Show. I'm here with Simon Kuestenmacher from the Demographics Group, talking all things the skills shortage. Simon, you said something really interesting before. You said that, I guess one of the ways we can get out of this skill shortage is automation, it's artificial intelligence, it's implementing ways to free up, humans to do other roles. I think all of society has a bit of an aversion to AI. It has a bit of an aversion to tech. I must admit, I do myself have a bit of aversion to tech. I'm a journalist and, AI and ChatGPT, they're being heralded as fantastic writers. And I'm, not particularly pleased by that, but I understand the importance of it. How can we overcome, I guess, our collective distaste towards AI and technology? How can we discuss with workers that bringing in tech is not going to lose them their job? It's just going to change their job.
So jobs will change. That is all but a given. And I would say that most jobs are absolutely safe. They are safe from being, disappearing into the ether of AI and you're being unemployed. The Australian workforce is much more pliable and flexible when they face change than we do justice. Just look at the case study of Geelong. This was a city where the car manufacturing just disappeared pretty suddenly. And we then, a decade ago, thereabouts, we talked about the post-industrial wasteland that Geelong was going to be. And the exact opposite occurred. The city very much transformed itself into a knowledge economy. The best and sexiest and greenest office buildings in this country are being built in Geelong. 10 years ago, exactly nobody would have expected that. So we're now facing change in all industries. That's absolutely certain. And your job, whoever you are, will change as well. And it will change in a way that AI makes many tasks not so much obsolete, but just super fast. So creating a map 100 years ago took months and months. 20 years ago, it was still pretty cumbersome on software. But nowadays, if it's a basic map, clickety-doodle and you got a map. It's very, very easy. But that frees the individual cartographer, in that case, up to do higher value-added tasks, to interpret the data, to discuss the data. And what AI will be doing for most jobs, or most knowledge jobs at the very least, it will make the world of work more humane. Because the tasks that are being gobbled up by AI, by automation, they are technical in nature in some sense. But the tasks that will be left with the humans, they are interpersonal in nature. So in the case of journalism that you mentioned earlier, that will mean that certain kind of writing, basic research, fact-checking of stats and so forth, this will ultimately be faster through AI. And that then frees the individual journalist up to do more investigative work. Because at the moment, journalists are, of course, being forced to duplicate their same content across 12 different platforms. And that just eats up, that is stupid work. And that is eating up valuable brain power of a much more highly skilled worker bee. AI will ultimately undo this. So that is helpful. If we look at the property sector in particular, we want to remember that the property sector has seen innovation, of course, over the last couple of years. Realestate.com.au, whatever it is, domain.com.au. Now you have listings online. It's all cool. It's really funky. And it wasn't the same 20 years ago. But It's just an innovation. It's not a disruption. Ultimately, the property sector functions the same way now than it has in the 80s, in the 70s, and the 50s. It's just a bit flasher. And so the real disruption in property is always looming. And this would be something like, how the hell are we building housing? I talk a lot with people in the property sector about prefab housing. And I'm looking at prefab homes mostly from a workforce perspective. Because if you build greenfield development sites at the moment on the urban fringe, what I see an awful lot of is tradies in huge driving from site to site. That is a waste of man hours that must not occur. And we can't afford this. It'd be much more efficient to put all the tradies into a big fat factory, and you then prefab homes there. You prefab not whole homes, but you prefab walls, panels, floors, ceilings in a factory, and they then get trucked on site, and there's a new trade emerging. Let's call them the Lego tradies, who just assemble, what would it be, 15 panels per house or something like this on site. And they do this in a day or two rather than months, essentially, which a house stands there. And you then better utilize the labor that you have. Factories can scale up. You can then ultimately drive down housing costs. But this only starts to be fun when you operate at scale. At the moment, lots and lots of people that I talked about the prefab stuff said it's not really all that much more cost efficient. We talk about companies that do this globally speaking, a company called Oka in Canada. They're building housing at 25% discounts, the building costs. And they're not doing complete prefab. They build a factory on site. It's pretty bonkers, but it's cool. It's cool and interesting stuff that's out there. And these are the type of innovations that I'm expecting to change property eventually. And if I'm in the property sector, I would always be looking out for the big picture disruptions. There will be a bit of innovation. Of course, we've improved the building materials and so forth. And our homes are now safer than they were before and so forth and so on. But ultimately, disruption should occur because housing is such a crucial issue. And now the policy narrative shifted. And we're now taking serious the approach of building housing at scale. And potentially we'll see a bit of a restructuring in the market in terms of who are landlords. Are mom and dad investor landlords? At the moment, that's very much the case in Australia. But now with the build to rent innovations that are popping up, revolution, I wanted to say, this is actually the chance of getting more industrial, big scale landlords in, and then the political narrative around housing changes. Because at the moment, you commit political suicide if you say you drive house prices down, because you have 2/3 of the population being homeowners, 2.2 million landlords or whatever it is in Australia. It's Bill Shorten proved that when he lost the unlosable election, that's not a smart move. But if the landlords are increasingly not small-scale investors, but big-scale investors, there is very much the political appetite to drive down house prices. So I think we're seeing this big shift on the policy end, bit by bit. This will sneak up upon us, but I think the writing is on the wall already.
Awesome. We'll get more from Simon Kuestenmacher after this break. Welcome back to the Smart Property Investment Show. I'm here with Simon Kuestenmacher from the Demographics Group. Simon, you mentioned or you hinted at some policy changes or a change of policy direction and writing on the wall. What writing are you seeing on the wall and what little policy changes are you seeing that might disrupt the property sector?
Well, there are quite a few shifts at the moment. One of the biggest, and this is true across all states, is we're seeing a power grab from state governments who are taking power away from local government. At the moment, local governments tend to be rather strong in this country. They have a lot of veto power, and a very cynical, purely self-interested councillor, elected councillor in a local government area should block every development that comes their way, because they're not incentivized to push through any developments, because whatever the development is, even if it's the best development that you could possibly think of, somebody will be against it. Usually the neighbor, where this is built. And then those people will not vote for you. They will be angry and you lose your job as an elected councillor. So you shouldn't be doing this. So we therefore created an environment. It's not incompetent local councillors, not at all. It is a system that incentivizes councillors to block development. The states are now mad about this. The states want very, very strong housing targets that are being fulfilled by each and every single local government area. They're now setting stronger housing targets. They're doing this by taking the vetoing power away bit by bit. And they're doing this by the carrot and stick approach. At the moment, they're only looking at the carrots. They're saying the councils that are fulfilling their housing targets, they will get additional funding. That's nice. So they're promising funding. That's pretty cool. The stick approach would be you fail the housing target, we're withholding funding. You fail the housing target, we will put the council under administration. These are the kind of tools that I'm seeing foreshadowing. But whatever it is happening, there is the states will have more control and they push stronger targets on the local government areas. This is not so much the complete turnaround of housing policy there, but the strong NIMBY culture, particularly in our middle suburbs, that will come to an end. Because the tools that enabled local governments to be NIMBYs, they will be taken away. And so you will then see more medium density or densification in the middle suburbs. That's all but a given, I would say. So the power grab, that's one of the policies. The other policy is, of course, the strengthening of renter rights. So very much what we've seen over the last 30 years, election after election, is that the number of primary votes going to third parties, so everyone from the Greens to Pauline Hanson combined into one a single party, the votes for third parties, anything other than Labour Liberal, went from 2% in 1987 to a third of all votes in the last federal election. So talking about a two-party system at this stage becomes a bit comical. What this means in the practical sense is that the biggest marginal party, the Greens, they are setting, they're the power broker. And they are the party of the renters. The renters are a growing cohort, and renters' rights will be one of their bargaining chips. So renters' rights, not only one direction. I cannot predict the exact policies, but the direction of policies is absolutely set in stone over the next couple of years. So renters will get more rights. What else from a policy point of view? We'll see the continued optimization of the existing housing stock. So expect that anything that smells like a holiday home, that smells like an empty investment property, will have the living hell taxed out of it. Exactly what the mechanisms are, I don't know, but that direction is happening. Also, we will see the continuation that's happening mostly on the local government level, the continuation of, let's call it the war on Airbnbs, the war on short-term rentals. It's one way of pushing out, it makes sense, it's a quick fix. You optimize the existing housing stock by pushing rentals that were not on the free rental market onto the free rental market by putting certain limits on Airbnb. Sometimes they say 60 days per year a property is allowed to be rented out, so that you, in theory, if you are on a big holiday, you can rent out your holiday home, your family home to a holiday maker. That's the idea, rather than this being a short-term rental compared to a long-term rental opportunity. That will continue. But of course, all those local government areas have difficult discussions there, because you do not want to kill the golden goose if you are a tourist destination. If the majority of your money comes from tourism and you completely outlaw Airbnbs, you also just shortchange your community out of quite a bit of cash. And you don't want to do that either. So it's a bit of a balancing act. And this balancing act on the Airbnb front will be done with a lot of shouting, fighting, arguing at local town halls. That is all but a given. I've been part of some of those town hall meetings, and it's somewhat predictable what's happening, but you need to fight those things out. That is part of the system. So I'd say these are a couple of the big picture development trends. Also, we'll see, let's put it this way, one trend that I'm not seeing, one big policy shift, is the establishment of a state-owned housing developer. I would like to see this, not the states buying property or incentivizing developers to build a certain amount of social housing, key worker accommodation into their developments, but to actually have somebody state-owned operate at scale. We need so much more social housing. It is almost unethical how many people are on the housing wait lists. And to operate at scale there, we would need somebody who can operate without a profit incentive, because at the moment we have demand across the full spectrum of the housing market. The top end, we're talking those ritzy, sexy apartments, multi-million-dollar apartments in the inner city and luxury villas or whatever. Plenty demand there, plenty demand in the shrinking middle segment, and plenty of demand at the bottom end of the market. housing development is a low margin game to begin with. They only make a lot of money, the developers, because they build many houses and they are expensive, but the margins are tiny. So therefore, it is always very, very easy for a developer to go bust. And they constantly go bust and then rebrand. And that's part of the game. But which of those developers, under these circumstances, also rising labor costs, shortage of skills, which developer in their right mind would service the bottom end of the market? Let's call it the bottom third of the market. They'd be dumb. It'd be almost unconscionable for them to operate there because they still need to make a profit. They can't. And so nobody is building housing for the bottom end of the market. The bottom end of the market is completely ignored, well, not almost completely ignored. There's one player operating at the bottom end of the market, and it's not the state, which should be the developer operating there, but it is rather, I call them the titans of industry, a reference back to Industrial Revolution England. You'll see plenty of case studies where big employers that need low-income workers in a relatively expensive destination, they know that they can't house workers. So they need to build housing for their staff. The Intercontinental Hotel in Sorrento is a famous case study by now where, they built this $100 million+ renovation of this marvelous, fantastic hotel. They need 80+ workers in there. And there's absolutely, I think they got 8 applications the first round of job interviews because there's no place to live in Sorrento, in Victoria for them. So those guys bought an old rundown aged care home and revamped it into staff accommodation. So that is the only player that is operating at the bottom end of the market. And that's not enough. And so this policy shift, if I may end on a on a wishful note, this is something that I would like to see very much. A state-owned housing developer. Is this actually in the books? I don't think so.
I just wanted to ask one other question. I want to bring it back a little bit. You talked about how the strengthening of renters' rights will be a policy like that you think will occur over the coming years. But you also talked about earlier about how we might see a wind down in the proportion of mum and dad investors in terms of like a less private investment and more of a larger, I guess, corporation or more industrialized landlords. Do you think the strengthening of renters' rights will have legs in that kind of climate? Or do you think, using renters' rights as a political tool only has legs if there's a lot of mum and dad investors in the world, in Australia?
Well, so the renters' rights, if you have a lot of institutional investors, let's say there are no mom and dad investors, let's say they're only institutional investors, then politically it is so easy to push through renters' rights. Because who cares about a couple of businesses? As long as those businesses still make money, that's all fine. Nobody complains. And one reason why we are seeing more build-to-rent developments, of course, build-to-rent development, they don't build one house at a time. They build big developments with 50, 60, 80, 100 dwellings at a time. That's because these are people with a lot of money. And we have a bizarre problem in the super funds. And the bizarre problem, globally speaking, is that the global capital wants to become more boring. So the vast majority of wealth sits with baby boomers at the moment. Baby boomers are now well and truly moving into retirement and into the pension drawdown phase of the life cycle. Or superannuation drawdown phase. So their money wants to be boring. If you talk to a financial advisor and you're young, they tell you, risky investments, that's fine. You can carry the risk throughout the life cycle. And that's what the baby boomers have done when they were young. Their money funded Facebook at the early stages and so forth. But now their money doesn't want those. Facebook turned out great, but it was a risky investment. And now baby boomer money in the coming decade wants to see boring investments. Boring is bonds, boring is property, boring is infrastructure. These kind of investments, they will have no problem getting money. If you're investing as a super fund, however, you can only do transactions from a certain size. It's not worth you doing a transaction of just a couple of $1 million. They want to do transactions, ideally 100 million at a time. And so you then build, 3, 4, 5, whatever it is, towers of build to rent. Bam, you have it. These build-to-rent towers, they sit in your books. They accrue wealth theoretically, but you're not selling them ever. You own them. You get a bit of income through rent. That is great. That is exactly what those superannuation and institutional investors want in the future. So I'm pretty sure that this will continue. You'll never go to this environment where everyone is an institutional investor in the rental segment. That'd be silly. But so you try to push the balance, as I think as a policy, bit to bit towards the bigger players. So you operate at scale and then bit by bit. So this is something that will sneak up on us. You'll make it a tiny bit less attractive to become a mom and dad kind of property landlord. And you then squeeze out those properties one at a time. And you'll then shift to an environment where they take up an ever smaller share of the market. Build to rent will have a bigger market. And you push people into these kind of developments because it's also the type of property that you want. You want to densify population. Remember that Australia sees strong population growth. We'll be growing probably at around 350,000 people per year every year in the foreseeable future. That means the country will double in about 65 years. And this is quite a serious problem. So if you have a kid now, or if you're under 30, you probably see this. We have a real chance of seeing Australia double the population. And there's, whether you like it or not is not the case. It's not interesting. It's much more interesting to say, well, where do we put all those people? And we then know, well, those people we need to densify. We have extremely low population density in our big cities. Cities don't function well at our scale with this density. So we need to build a higher density. And it also means that the secondary cities of today will become much bigger. And so the outskirts of a Newcastle, of Wollongong, they will become, almost the inner suburbs at some stage. And then the outskirts of those towns, they should see moderately sized, medium density dwellings as soon as possible. This sounds a bit, pie in the sky kind of thinking, but these trends are, if you take the longitudinal view, all but certain, the doubling of Australia in about 65 years or so.
Pretty crazy. It's not that long. It's not that far away, is it? So there's a lot that needs to get done in those 65 years to ensure we can accommodate, I guess, everyone. Simon, thanks so much for your time today. I really appreciate you donating half an hour of your time. There's a lot to unpack. I think I'm going to need to take a couple of days off just to sort of wrap my head around some of the stuff you've said, but I seriously appreciate it, mate. It's been a pleasure.
It's been an absolute delight. Always happy to be on.
I'll hold you to that in the future. And to our listeners, thanks again for tuning in. We hope you enjoyed this episode. Like or review us on whatever platform you get your podcast from. Check us out on social medias, Facebook, Instagram, LinkedIn, and Twitter. And if you have any further questions, email editor@smartpropertyinvestment.com.au.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Do you need help planning your next event? With over 15 years of experience, Captivate Events is the expert in event planning. Our dedicated team ensures every detail is meticulously handled. Whether it's a gala dinner, exhibition, conference or study tour, we've got you covered. We'll be there every step of the way, from conceptualisation to flawless execution, to ensure your event is a seamless experience, minimising the time and stress involved in planning. Make your next event one to remember. Visit www.captivateevents.com.au or call 02 88 66 2440 and find out how we can captivate your audience.